Hey, my name is James Nicholson and welcome to my YouTube channel. In this video, I want to talk about how you can get an interest rate of just 1%. Now, this is for first-time buyers, but this is going to have a big impact on the market. In fact, new build properties, which this can be used against, have actually gone up 16% in the last year. So this is going to have an impact on house prices. So whether you're a new buyer or not, I think you should watch this video and know how these type of products and how people are going to bring out products that are going to keep the market as high as possible. Because at the end of the day, banks want to lend you money and they want house prices to be as stable as possible, because the worst case scenario for them is a massive crash in property values and then they're stuck with people in negative equity. That's not good for anyone. So before we jump into this, as always, if you haven't done already, do subscribe to the channel over there and hit the bell notification. And while you're here, smash the like button or tickle the like button, whatever floats your fancy, but make sure you hit that like button in some way. That really helps me with the YouTube algorithm. Every single view on the channel is because of you guys hitting that button. So do that right now. So there's a company out there and they are called Own. And they have a product called the Own Rate Reducer. Now, how this works is it's only on new build properties and only on companies that they've got partnerships with. But they've got partnerships with all the big developers like Taylor Wimpey, Barratt Homes and all those sorts of people already. So there's a high probability that you'll be able to see this. And Own are effectively kind of like a broker. They're going to partner with lenders, and most of the big lenders are on board with this as well. You've got Virgin, Barclays, all the big lenders seem to be going with this. And often what new build developers do is they have a way to contribute towards your deposit. And so they can give you as much as 5% towards your deposit. And then that money, instead of going towards your deposit, is actually going to go towards your payments on your property. So what they're going to do is you can get a rate. There's a good example on this, which I'm going to go through here. They'll contribute that money. They'll give it to Virgin or Barclays or whoever you do as towards the payments for the 2 years. And then you just have to pay whatever's left. Now, effectively, what that does is that takes your interest rate, or what the interest rate would be, or what it would feel like it would be, from around 5% down to 1%. Now, when you take this type of product, you will always be stress tested. So they'll check your affordability at 5%. And how this can be fairly good is it allows you to get in that property and have cheaper monthly payments for those first few years. Now, what you've got to be careful of, and you don't go into buying a new build without this, is you've got to be aware that new build prices can drop. So you've got to make sure that you are going to be able to cope with that and not get yourself in a negative equity scenario. So let's have a look at how Virgin say this product can work. So Virgin are talking about lending you £300,000 in their example. And so what they're saying is that if you had a 2-year mortgage with them, the rate on that with them at the moment would be 4.79%. So it's on a 2-year rate. Now, the fees on that would be $995, which is not too bad. Now, here's the difficult part on this one, on this example. They would want 65% loan to value, which means you've got to have a 35% deposit in this example, right? But the rate in this scenario would be cut to 0.99%, which is crazy, right? So the rate would be massively reduced because the lender would take from the developer, the 5% deposit, and the monthly payments that you'd be paying at the 4.79, they would pay that big lump sum. And that means that your payment would only be the equivalent of a 1% interest rate, which is going to be a huge difference. Now, who should go for this? Well, this is only for first-time buyers, but there's tons of people out there that just don't have the deposit maybe to get into the market. Then this isn't going to be for you, right? You need to have a deposit already. Now, there are tons of people as well that have a deposit, or their family can help them with a deposit, but they've been waiting for interest rates to go down. This could be the right kind of product for those types of people. Now, remember, you can still overpay your mortgage by 10% a year to make sure that you don't go into that negative equity, and your interest rate is only 0.99. So it will be worth overpaying the mortgage if you can, to give yourself that equity. The difficulty with a new build property is it's hard to add value. So the only thing you can really do to make yourself a little bit more secure is to overpay that property. Now, what's happened is, since this has launched, and other schemes, right? It isn't just this scheme. There are other schemes at the moment to help people get into that first-time buyers market. And interest rates dropped in December and January. But house prices in new builds went up 8% in a month, and it's 16% up year on year. So what impact is that going to have on the rest of us? Well, overall, average house prices will be pushed up by this, won't they? And so this is, if you want house prices to go up, which some of you do, some of you don't, if you want house prices to go up, this is definitely, these types of schemes are going to push house prices up for sure. And that is positive for those that want a fairly stable market, but not so good for those that are priced out of the market. Now, there are going to be other schemes out there where the government can help you with a 5% deposit. So if you can't have a big deposit, then this scheme isn't going to be for you. If you don't have that, then go and have a look at the 5% deposit schemes, the mortgage guarantee scheme that the government has out, because those might help you get onto the property ladder. There are lots of people that can't afford these big deposits, that they can pay their rent and they could pay a monthly mortgage. Even at today's rates, they could fix a rate for 5 years, and it would mean that it's better off for them paying down the mortgage rather than paying a landlord. Anyway, let me know what you think of these schemes. I think these are definitely going to move prices for sure, and I think they are going to help some people in a positive way. Do comment below with your thoughts and what you think these will do for the property market. Do make sure you like this video and all the other videos you watch. I know some of you get upset when we say tickle the like button, but come on, it's not going to kill you, is it? All you have to do is press a button over there, guys. Do subscribe and check out all the other content on my channel, including this video right here.